We heard from two gurus. The price of gold and silver is going up, up, up. We have some good news. I'm going to share that with you later in the video. First, let's do a recap of what happened in the gold and silver market and some very important major stories happened this week that will impact the price of silver and gold, will impact the general markets. Let's go over all that in this video right now. We've got some super interesting stuff to talk about, but first, thank you for joining me in Ron's Basement. You are important. I put out a video every day. I intend to continue that one day at a time. So, hey, you got a friend for life. You are always welcome here. You're important. Your time's important. And I honor the fact that you, yes, you, wherever you are in the world, have decided to join me right now. You can subscribe right here. Turn on bell notifications if you please. Leave a comment in the comment section below, and you can share this video with anyone you like. Let's start with gold. It started the week at $17.12 per ounce and ended at $17.18 per ounce, up about 0.33%. Hey, we'll take a fractional gain, especially with what we've been through over the last months and quarters. Still above its long-term support. 1675 seems to be like a key area that a lot of these technical analysts are talking about. Still, for now, holding strong above that level. Silver closed the week at $18.78, up almost a whole dollar per ounce, 5% for the week. A very good week for silver. I think there's something behind that has to do with the energy crisis and the potential demand for silver for the green energy initiative, solar panels, and the like. We'll see if and how that continues to play out in the coming weeks and months. Did you notice that the gold mining stocks stayed about even for the week? The GDXJ, the ETF that tracks the junior gold mining companies, was about $31 at the beginning of the week and at the end of the week. However, it's important to remember that just back in April, 5 short months ago, if we can remember back that far, the GDXJ was at 52. It's at 31 right now. It would have to go up more than 70% just to get back to where it was 5 short months ago. The good news on that is that there's a ton of runway ahead of the gold mining stocks, and almost from any measurement, any metric, whether sentiment or value, things are just at like an all-time low, and from the mud will grow flowers. But if you're invested in silver mining stocks, you had a pretty darn good week. Most of the silver miners were up between 5 and 10% for the week. Obviously, that corresponded with the 5% rise in the price of physical silver. And in the general stock markets, the S&P 500 closed at 4,067 for the week, up 4%. Impressive, but I would call the sentiment in the general markets right now paranoid. I think people are a little optimistic after last week, but very paranoid. I don't think there's a ton of underlying confidence in the general markets. We'll see how that plays out in the coming quarters. The 10-year bond yield went from about 3.2% to 3.3% for the week, still relatively high looking back over the last 5 to 10 years. That pushed mortgage rates up close to 6% for a 30-year mortgage. And the U.S. dollar index was unchanged for the week, right around 109, but still at that level is at historic, very high levels. Not a record, but historically speaking, very high levels. That is wreaking havoc in the rest of the world as the United States exports inflation, and it has wreaked havoc, has been a big major headwind for the price of silver, for the price of gold, and as a result, the precious metal mining stocks. And while it may not feel like it to us right now, eventually the US dollar will turn around. These things go through phases and cycles, and trust me, The rest of the world is not happy about the fact that the US dollar is so strong. Something interesting I want to point out is that the dollar has appreciated, the dollar index, the XY, almost 20% in the last 1 year. That has given the dollar much more buying power. Think about it. If it hadn't gone up by 20% and allowed us to buy more with our dollars, what would this 8, 9, 10% inflation that we've had over the last year, what would it have looked like if the dollar had just stayed even? Or, God forbid, if the dollar had dropped by 20% in the last year? The inflation numbers could be astounding. And good old Bitcoin, it ended the week around 21,000, had a pretty good week, up about 5%. And if you're a crypto believer, that's great, but I still can't get comfortable with it. I mean, when a guy like Michael Saylor is kind of the head spokesman for the whole community, that just gives me the creeps. And when you go down the line of the other people involved in that arena, just me personally, I don't feel real comfortable with the situation. Who knows? It could be the future, but for now, I'll sit on the side and watch. When it comes to gold, the big factor right now is the US dollar, and that obviously is connected to the Federal Reserve policy and what Jerome Powell and the Fed does going forward in regards to their supposed fight on inflation. It sure feels like it's going to be tougher and tougher and tougher for them to get any more hawkish. But I thought the same thing 3 months ago. They seem to find ways to become a little more hawkish and a little more hawkish. This Fed meeting at the end of September, where we're expecting another interest rate hike, whether it be 0.5 point, 3/4, or a full point, will be very impactful to the price of gold and silver. And we have to wonder, are they talking so big because they can't actually act big? They can't raise rates up above the inflation level. The economy at this point can barely absorb what they're doing, and the impacts of what they do often don't occur for months or quarters until later. So it's going to be real interesting in the coming 3 to 6 months what the Fed actually does versus what they're squawking about constantly. And we heard 2 gurus this week speak very positively about gold and by default silver as well. 2 people from complete different spectrums. Gareth Soloway is still very bullish on gold through the end of the year. And across the ocean in Holland, Charles Nenner, an ex-Goldman Sachs guy who's very well respected and does some super cool in-depth research on cycles, market predicting, all that. He says gold will also have a very strong period into the end of the year. So there's some good news for us. To me, the last couple weeks have felt pretty good, relatively speaking, when I compare to how the price of gold and silver have behaved over the last 6 months to 1 year. And silver appears to continue to have robust demand from investors, from industry, and supply that is continuing to be constricted. Don't forget that between 2016 and 2021, the amount of mine output of silver dropped by 10%, while demand continues to grow. There's all these figures about the silver being drained from the COMEX, registered and eligible, and this and that and the other, that look to be very bullish for the future price of silver. We've already touched on the precious metal mining stocks, but it's important to remember many of these companies are now cheaper than they were when the pandemic hit. Their balance sheets are in very good shape. Yes, from a cash flow and profit perspective, right now they are challenged with high inflation and lower metal prices. But if the metal prices take off, which they very well could, these companies could be positioned for windfall type profits in the future, and investors in the stocks could be positioned for some super high gains. On a general economic front, if you talk to Janet Yellen, everything is great. But if you actually live in the economy, you know that the real estate market is going through a major correction right now. Every data point coming out of real estate has been negative. 56% of Americans polled by the Gallup organization say that they are having a difficult time paying their bills with inflation. 12% of people said they are in severe distress. Only 36% of American families said that they could afford to buy the back-to-school supplies their children needed when they returned to school this fall. But like Janet said, everything's great in the economy. Jerome Powell says the same thing. Look at the employment numbers. Well, guess what, guys? Employment is generally accepted, generally known by any economist to be a huge lagging indicator. What that means is if the economy slows, that doesn't show up in employment numbers for 3 to 6 months later. So maybe Janet and Jerome should take a walk down to their local food bank where they will see a record number of people lining up to get some free food. Geopolitical strife plays a huge role in the price of gold and silver as well, and the war in Ukraine continues to rage on. The United States and other Western governments continue to funnel weapons and funds into the country, fighting the war basically by proxy against Russia and the East. So we're not seeing any progress in that arena. We don't like war. We don't like any of that, but that's just the fact that I need to report to you right now. And Vladimir Putin and Russia have essentially cut off all gas to Europe and Germany this week. That is causing major, major issues in the European economies and will bleed through to the rest of the world. From an economic perspective, I'm not saying disaster, but things look very, very dicey and precarious and fragile right now. Well, that's a wrap up on gold, silver, the economy, geopolitics. I think we covered it all, and I'm glad that you joined me here in Ron's Basement. I'll be back tomorrow. Don't forget, you got a friend for life here in the basement. I'll look forward to seeing you again soon.